EB5 is expensive because clients ask, why am I not getting 8% return on this stuff? Well, if you're getting 8% return, why doesn't the developer just then take funds just entirely from the bank and not have to do, the fundraise and to do, all this government reporting and all this sorts of stuff. So that may be one of the reasons why, clients get maybe at most 1% return. I've seen projects that, repay back or claim that they'll repay 12 or 13%. This is all a red flag. A stable investment in the US, right? Not in the emerging markets where we sort of reside, but in the US, if you're getting 6, 7, or 8%, that's wild. That's amazing. But for you to have a secured or guaranteed investment at anything even beyond that, and to throw an immigration component in there, I think that's definitely a red flag and you should watch out for.
Yeah, we're looking to fill the gap, right? So developer will max out the bank. Developer will have their own cash and land. So it's that middle piece.
Right.
And without EB5, that middle piece, that second piece, you might call it mezzanine or preferred equity, that could be 15%. If we charge 15%, they'll never use us. Because they'll use a fund that already has money, ready to go. The only way EB5 works is if we cut our rate.
Right.
Big time. Now developers love us. If we cut our rate, we have to cut investors' rate.
Well, here's the thing is you're coming in at a discount, but there are also, why would the client, still go with it in terms of, they're getting a discount, yes, but there's also costs to the developer because EB5 construction is different than regular construction. Sometimes if they have the means, they can finish the construction cycle in, perhaps 14 months. But because it's EB5 and because there's government reporting and job creation fundamentals, they have to spread the construction over perhaps sometimes a year and a half, 2 years, if not more. Is that correct?
Yeah, it's also it's very costly to do this business correctly with all the reporting, all the requirements with the RIA. We have a fund administrator that we have to work with. We have securities counsel, we have immigration counsel, we have real estate counsel. We have to fly around the world and to do it right. It's an expensive proposition for sure.
And this is really not the investment to only focus on profit. This is what I tell the majority of our investors. I think when you're investing in EB5, the true cost of the green card is forgoing the interest. So don't focus on interest rates. Don't go work with a regional center that doesn't have a good track record, that needs to offer you high interest rate to attract the investors, because then you're getting 8 or 10%, but you're risking your capital contribution.
You're absolutely correct. I think the client, your main objective is to get your green card, get it quickly, and get your money out, and then go off and make an investment where your immigration is not tied in.
I often say 6% of nothing is nothing.
Exactly.
So protect your capital first.
Protect your capital first. Where are we headed? So you guys have new projects coming out. So maybe give us a sneak peek into your pipeline. What's coming out? What locales?
Sure. We are trying to have 2 pipelines. One, high unemployment. One, rural. We just had our first rural project recently. It sold out very well. We're still looking to do multifamily in major markets. We have one in Atlanta, we have one in Miami, obviously Washington, D.C. Rural projects are a little more difficult. You have to it's a diamond in the rough, which is why we were one of the last ones to the rural game.
Mm-hmm.
We saw 50 of them. They didn't meet our standard. We have a few around ski resorts that we're doing. We have a amphitheater that we're doing. We have some Marriott hotels that we're doing. So we're trying to have both options for clients.
I sense coming from the region, clients ask for rural. This has been the push, but I'm going to go out on a limb here. Please correct me if I'm wrong, as we're all here to get educated on the topic. But, rural might not be the best bet because TEA, for example, is you guys just got an approval in 15 or 16 months. So the ability to get a quick approval is, around the same as rural and TEA.
Yeah, you might get a rural one in 8 months. You might get a high unemployment one in 13 months. So is the extra 5 months worth maybe a lower quality of project?
That's exactly what I want to talk
Depends
about.
on the client's needs as well. If someone already has their kids here in school and they're not really in a rush to move to the US, they can wait the year and a half, then why should they choose rural?
Well, now we've got concurrent filing, which bridges that gap anyway. But one thing I'll say about rural, which, in our previous discussions, you guys seem to be on board. You're not going to just jump the gun. Just because there's a rush or demand for rural, you're going to look for quality projects. And I think based on my observance of, rural projects that are out there, the issue is that if you're pumping $40 to $100 million into barren land, and that's why it's called rural, because there's nothing there, how are you going to recapitalize on that? If you're trying to build housing somewhere where previously housing was not there, perhaps the market's telling you, don't build housing there, right? Otherwise, the market yields and people would have already done that. So that's one thing to be careful with this idea and this push for rural, as I've seen a lot of other regional centers push for this. Does the project make sense ultimately?
Yeah.
Can you recapitalize, get your funds back?
The rurals that we're doing are really centered around tourist destinations. We're at ski resorts. We did one in Vermont. We're going to do one in Utah.
Vermont ski resort.
Yeah, not that one, but a better one. And then other kind of resort type destinations where there's already demand. There's already people going there. I agree with you. Just a normal multifamily development in the middle of nowhere might not get you your money back.